Hey everyone, I'm hashtag the tallest man in real estate here on a great Friday in June, and I've got some exciting news. The mortgage interest rates are finally coming down a little bit. And then I also want to talk to you about consumer sentiment because that definitely drives the real estate market. So, without further ado, let's kick this off. As you know, I'm Eric Jansen. I'm a realtor here in San Francisco. The first chart I want to show here actually is the mortgage interest rates chart, and as you can see, we're finally starting to tick down just a little bit here. Once we had the debt ceiling default fears go away, and they slap that band-aid on it, you did see interest rates start to go down. And I truly believe that once we get below sixes and probably mid fives, that's when you're going to see a flood of buyers heading into the market. So it's always a good time to buy when other people are fearful. Once we do start to get those lower interest rates, there's a lot of pent up demand. From my buyers, many people are just waiting right now. So I think it's a good time to get in when you don't have a lot of competition. Also, typically, June, July is usually a little bit slower in terms of new listings. You also have a lot of people on vacation, so it's a great time to get in. If you're selling, usually I typically tell people you wait until September or October. However, this year is very different. If you're needing to sell, you may want to just get it on as soon as possible because there's not much inventory out there. So the next thing I do want to talk about is consumer sentiment, and this really does drive a lot of the real estate market, especially in your local economies. And so in the Bay Area, a lot of people are very heavily into the stock market. They've got a lot of their company stock that they get matches on. And so if your tech company's not doing as well, you don't feel as wealthy. But you can see that we're starting to tick up on consumer sentiment. And I'll read what it says on the left here. It says consumer sentiment lifted 8% in June 2023, reaching its highest level in 4 months. And it's reflecting greater optimism as inflation eased and policymakers resolved the debt ceiling crisis. Then I also want to show a note, and this is the paragraph to the right. It says sentiment is now 28% above the historic low from a year ago and may be resuming its upward trajectory since the sentiment remains low by historical standards. And so you'll see, I mean, we were way below the 2008 market crash. So hopefully we are starting to see this tick up a little bit. And as we do start to see that tick up, we will see more buyers out there. One thing I always tell people is when your future family and your finances align, that's when buyers go out. It's called the 3Fs. If you have any questions, we'd love to help you. Here's a little information on my team and I. We were number one the last few years actually on the buy side, and we're one of the top realtors here in San Francisco. So if you have any questions, we'd love to help you out. And I hope everyone has a great weekend, and let me know if I can help you out. All right, bye-bye. Hey, everybody.